Stu Taylor here with Lorry Hughes. He's the managing director of South Boulder Mines. And I know we're not talking about Boulder, Colorado, so give us a little bit of an education.
Hi, Stu. Yeah, so I'm Lorry Hughes. I'm the CEO, managing director of South Boulder Mines, and we're focused on potash production out of the world's first open-cut potash mine in Eritrea. So we're in the feasibility study stage at the moment. We're looking to be in production in 2016.
All right, so hot buzzword, potash, not a lot of companies involved with it. What's the demand for that right now in the applications?
The fertiliser industry is growing. The fundamentals behind it are outstanding. It's all about world population, changing diets, and increased fertiliser use. Potash is irreplaceable. It has no substitute. So we're very pleased with the fundamentals for the commodity that we're targeting at this point.
All right, I'm going to put you on the hot spot here a little bit, Laurie, and ask you perhaps what competitive advantage you may have over the other few companies that I know about who are involved in potash.
We have an outstanding competitive advantage. The main one is cheap capex. We are the world's cheapest capex per tonne of potash in the world. We've completed a scoping study just recently, only last week, where we've defined the initial project to cost in the order of $740 million. This is the cheapest capex startup in the industry, and we're going to be using open pit mining methods. And that also is a world first. 90% of the world's production comes from underground sources, and we're looking to do open cut mining.
That's fascinating. So that immediately eliminates a monumental problem and becomes very cost effective and efficient as well.
Absolutely, it allows us to get into production quick. It also is low technical risk. Now, the thing about underground mining of potash is technically very risky and typically very capital intensive. So we're looking to have essentially cheap capex equals low financing risk, and open cut mining equals low technical risk.
Where's the stock trading? Could you give us some of the numbers, the outstanding shares, market cap, the trading range, debt, burn rate, whatever you feel is relevant?
Yeah, over the last 12 months, we're currently at $1.50 a share, Australian dollars. We've been as high as $6 a share, which had us at a market cap of $600 million approximately. It's all been about the potash. The market malaise has obviously caused a lot of stock prices to crash. We are fundamentally sound. We've got a good cash position at the moment, and we are forging ahead to get this potash project into production.
What about your staff, your management? Do you have any problems on that front? Infrastructure, help, political problems?
No, we've put together a first-class team that will grow. We've got new team members coming on a monthly basis to help us build this mine. We've got great support from the Eritrean government, very much standing behind us and alongside us as we move forward together and build this mine for early production.
Well, a lot of people have the product, a lot of people have the management. There's always some problem. They can't raise money or they don't have the equipment. Where does your problem lie? Everybody has one.
Well, we don't have a problem at all. We see key supporters of our project in the potash industry. We see easy avenues for finance. We're only talking about $740 million or less to get the project in production. This is not a lot of money in terms of the revenue that can be generated from this project. The financing looks very, very simple. Essentially, our project will be financed in a heartbeat from the appropriate groups. We're in discussion with a number of parties already, and we have been for approximately 2 years since we've seen the way that the project is going to go forward. So that financing risk, the next 12 to 14 months will be focused on delivering the feasibility study, where we'll dispel any myths about technical risk.
I'd like you to dispel a lot of what goes on in the media, and so much, whether it's politics, whether it's the mining business, whether it's life, is driven by media attention. It seems like people get excited over uranium, they get excited over rare earth elements. Gold is a staple. Everybody's excited about gold. I can remember when diamonds were hot. Is it my imagination, or is there something that's changed so that somehow potash isn't the sexy commodity anymore that it seemed to be a couple of years ago. Is that
Potentially, no.
legitimate
I don't think so. The fundamentals behind potash are very sound for the very much the long term. So it's not about that. I think people are starting to realise that over all the companies in the world that are proposing to build new potash developments, only 1 or 2 of those projects will get built in the next 10 years in the world. South Boulder is certainly going to be one of those, pushing to be one of those companies building. Maybe the investors have realised that potash business is not as easy as some companies paint it to be. Well, we're certainly not saying that it's easy. We're saying that our project is a hell of a lot easier than a lot of other projects we've seen around the world. Because of that, typically because of that low capex and that low technical risk, because of the open pit mining.